day. Ira Epstein of Linn & Associates with your metals market wrap-up, and this is for Wednesday, the 30th of October, 2019, just about 3:30 p.m. Central Daylight Time. Well, an all-time high in the stock market that you can see. The Russell's the one fading away here, unable to make the new highs, but take a look at the other markets. They're just on a tear to the upside. The dollar down a bit. You're getting the British pound up a little bit, and the other currencies sort of mixed. A down day in the energy markets. Now, we wake up to the fact that in Santiago, Chile, the president there has called off the November 16th, 17th meeting where hopefully the U.S. and China were going to get together and sign a phase one deal. Then if you were watching what went on early in the morning, China also said they're going to have real trouble ramping up anytime soon without disturbing the market. Code word, they don't want to buy the grain that we think they're going to buy. That's how I'm interpreting that. And then Steve Mnuchin, our U.S. Treasury Secretary and one of our key negotiators in all this, said too that they're going to have trouble doing it that quick, but he believes over time, a couple of years, they can get that done. Okay, we'll see. In the meantime, how you look at it is you then go to the Fed. And in the Fed today, they walked the tightrope. And what the Fed chair did is he said, I'm going to pull back. Basically, the Fed is going to pull back and not cut interest rates again unless absolutely necessary. They want to see inflation able to grab hold. They'd like to see it get up to the 2% level. He sort of said the Fed has the markets back, but they see things fine. So I then looked at a study what happens over a 25-year period if the Fed does 3 cuts and stops. Typically stocks rally the following year. So a lot of things to digest. But I think for the gold bugs, it was good news. The Fed wants inflation. You want to fight that? Go ahead and do it. I don't want to fight that. When we look at a weekly chart of closes, the market is down for the week $2.90 approximately. We still have upside bias as you're over the 18-week average of closes. And admittedly, this is a market that's been in a corrective mode since it's the high settlement price on a weekly basis of $1526.60 recently. When we come to a daily chart, you can see the chop action that's in here. But you had an outside day up today. So what the bears need, if they're going to get right this market that it's going to go down, they need today's lows to be taken out. My theory is when you have an outside day up, it's a signal that the market has caught a group of people in this area that has been bearish, and now if the market rallies, they're the ones under the pressure. Take that out, and what happens is you're giving them the green light, and the market could work lower. Where's the battleground? I want you to look at this 18-day average of closes. If you don't think that's the battleground, fine. I think it's absolutely been the battleground for quite a while, and the market's caught in there trying to figure out what to do. If it breaks down, the next support level to me is the 100-day moving average. If it goes up, where might the resistance be? Well, I'm going to look at the Bollinger Band, which is 1511.60. And the first thing I want to say is that's not very much of a move in there to be right. The question is, can it break out of the sideways action that it's been doing to either get a good up move down, up or down? I don't know which one at this point. Are we trending right now? No. You have a lower low, a higher high, support against the lower Bollinger Band. Today's low in the market was 1483.10. The Bollinger Band's 1482.10. You know what I think about selling Bollinger Bands or buying against them. It's not the thing that I think you do. Momentum is measured by the slow stochastics, flat. So we have a market that the bias of the market, I didn't see the settlement price, but I think it's right under this 1496.80. I think it's around 96 and a fraction here. You've got the swing line that's got a higher high, lower low. I'm going to call the market neutral. When I come to the GLD ETF, we already have the settlement, and this market closed over that 18-day average of closes. The break low today was under that one. We have a higher high, lower low, and again, just like in the futures, this narrowing action. We have a Fed that wants inflation to go up. Now, they're not breaking interest rates further, and lowering them's the right word, to cause the inflation, but they want to see it occur. Very big difference in that. In GDX, this market turned its trend up today. You've got now with the outside day to the upside, higher lows in the close over, the 100-day and the 18. You've got higher highs. So I'm going to take an arrow. I put this together before I started recording and make it point up there. Until today's low's taken out, I think the bulls grabbed control. Potential target 28.35. What I don't want to see taken out in the market is today's low, either tomorrow or Friday. If on either day that's done, you could put in the play very quickly the objective of the lower Bollinger Band. Gold-silver ratio. It's been making money for the silver gaining on the gold overall. You're getting corrections along the way. I don't know that this is anything more than gold gaining a bit on silver today. I don't know if it's a trend change. Silver on its own is in an uptrend. It's now got higher lows, higher highs. That's bullish. Take out today's low, I change my opinion. But what's the theme you're seeing? Look at how narrow these Bollinger Bands are getting. Something big is brewing here. And if this market can start to the upside and get momentum to turn with it, when a silver comes alive, it is a son of a gun market. When it decides to move, be it to the downside or the upside, it really does it. This market's throwing out all the warning signs that something is about to happen. In the copper market, you backed off today. Now, let me warn you, you had an outside day up yesterday. My charting technique is such that if you take the low of an outside day up, the market often makes a run to the closest of a lower Bollinger Band or a key moving average, in this case the 100-day. What counters this and bothers me is that normally I don't have an embedded stochastic at work, and this is the hierarchy, this rules it. So in the process, you might well get a break to that number. However, until you lose the embedded reading, it's saying it's a better buy than a sell if it gets down there. So something to think about. In the platinum market, we have a market that is going sideways here. It's overbought. It is in an uptrend and been in one. It got for 3 days in a row over the upper Bollinger Band, pulled back then into it. This market's still looking fine other than being overbought. The trend is up unless 918.60 is taken out. And today I was on Fox and Liz Clayman's talking about palladium. I've been telling you about palladium for I don't know how long and how I think this has been the strongest of the metals, and she wants to get a palladium necklace. I understand it. You got today to $17.99, almost $1,800 an ounce, $300 an ounce more than the gold market. And this is really a catalytic converter. I mean, people don't have palladium rings, you know what I'm saying? But it's supply questions. They're for use in both gas cars, but what about electric? There's an element there for it, I understand. Higher lows, higher highs. Take out 1749.40, and caution should be thrown to everybody. Lose the embedded reading, and then I think you're back in the play for that 18-day average of closes. Last, the dollar index. We began a contra-trend rally. I told you I was looking that if it continues up the first level of resistance, the 100-day average, above it the 18. This is how you looked. Now, this is yesterday. What's the rules that I throw out? They're my charting rules. I wish that they all worked all the time. But if you take out the high of an outside day down, I'm looking for the market to go to the nearest of a key moving average or a Bollinger Band, depending on what's closer. You tell me what this market did today. Made its run right there. Boom. Right back down. So now, until you take out today's high, the bears have grabbed control of the market again. It is oversold. It went down to an objective, the 100-day average, and that's been the fighting zone. If it builds momentum, you have the possibility of that lower Bollinger Band coming into play as well. So there's a lot to digest here. And for you that watch my special reports, today is the last day of the stock index report. By midnight tonight, it automatically comes off. There's none up there after that. I have to go do one, and I'm trying to figure out what I want to do. But if you'd like to learn more about it, and you'd like to see the report, because it's going to go away, go to www.iraepstein.com. You're going to see seasonal charts, 5, 15, and 30-year, what I was looking for in the S&P going into year end. You're going to see quarterly, weekly, monthly, and daily charts as well, along with the price counts, which we had a big meeting on price counts today. I don't want to tell you where the firm thinks this market could be headed, but we'll talk about that another time. I'm Ira Epstein. Enjoy the report. See you tomorrow.